Hi, here are some important rules of thumbs for handling debits and credits on closing documents. General rule of thumb. Double entry system. On the closing disclosure, most items are entered on both the buyer and seller sides. This is called a double entry system. This means that as an item is a credit to either the buyer or the seller, it is listed as a debit to the other party. For example, the purchase price is listed as a credit to the seller and as a debit to the buyer. Using the double entry system, the following items are entered as a credit to the seller and a debit to the buyer: purchase price, homeowner association fees. The following items are entered as a debit to the seller and credit to the buyer: property tax, tenant rental deposit, tenant rental payments, interest of assumed mortgages, purchase money mortgages. Okay. Credit to seller and debit to buyer. Purchase price. On the settlement statement, the purchase price will be entered as a credit to the seller and a debit to the buyer. Basically, what this means is that the seller is owed the money for the purchase, indicated by being entered as a credit, and the buyer owes the money. So it is entered as a debit on the buyer side of the statement. Homeowner association fees. On the settlement statement, the homeowner association fees will be entered as a credit to the seller and a debit to the buyer. Basically, what this means is that because the association fees are prepaid, paid ahead or in advance, the amount overpaid by the seller will be given back to the seller. It is indicated by it being entered as a credit to the seller. The buyer owes the money, so it is entered as a debit on the buyer side of the statement. Debit to seller and credit to buyer. Property tax. On the settlement statement, the amount still owed by the seller for property taxes will be entered as a debit to the seller and a credit to the buyer. Basically, this means that the seller is paying the buyer for the unpaid tax while the seller owned the property. Tenant rental deposit. Rental deposits for investment property that the seller has collected will need to be transferred to the buyer at closing. This is indicated by a debit to the seller and a credit to the buyer. Tenant rental payments. Rental payments for investment property that the seller has collected for the time period that the buyer will own the property will need to be transferred to the buyer at closing. This is indicated by a debit to the seller and a credit to the buyer. Interest on assumed mortgages. Interest on mortgages are paid in arrears or behind. If a buyer is assuming the seller's mortgage, the seller will owe the buyer money for unpaid interest. This is indicated by a debit to the seller and a credit to the buyer. Purchase money mortgages. If the seller has agreed to loan the buyer money for part or all of the purchase of the property, then the amount the seller takes home after the closing is reduced by the amount of the purchase money mortgage, the money being loaned. This is indicated as a debit to the seller and a credit to the buyer. Single entry. There are some exceptions where the item is only put on either the buyer or seller side as appropriate. These include the buyer's deposit, which is listed only as a credit to the buyer and nothing on the seller's side. The buyer's new mortgage obtained from a financial institution entered as a credit to the buyer with nothing on the seller side. The seller's existing mortgage is being paid off, which is entered as a debit to the seller with no entry on the buyer side. And documentation preparation fees, recording fees, title insurance, attorney fees, property inspection fees, property repairs, property surveys, and broker commissions would be debited to the party taking on the fee as negotiated. In summary, the following is a list of items that would normally be credited to the seller. The total purchase price and all prepaid items. In summary, the following is a list of items that would normally be debited to the seller. The broker's commission, deposits held of investment property, documentary stamp tax on the deed, mortgages assumed by the buyer, mortgages paid off through the sale, prepaid rent of investment property, property taxes, purchase money mortgages given to the buyer, interest for mortgages assumed by the buyer, owner's title insurance, preparation of the deed, and seller's closing attorney. In summary, the following is a list of items that would normally be credited to the buyer. Deposits held by the seller of investment property, earnest money deposits, interest for mortgages assumed from the seller, the amount of the mortgages assumed from the seller, new mortgages from lenders, prepaid rent of investment property, and property taxes. In summary, following is a list of items that would normally be debited to the buyer. The buyer's closing attorney fee, the fee for the lender's title insurance, preparation of the mortgage, preparation of the note, the amount of the purchase price, the recording amount of the deed, the recording fee of the mortgage, any state documentary tax stamps, and state intangible tax.